Watching Investors Guide in ET Now. Thanks for staying with us. Suresh Surana, founder of the RSM Astute Consulting Group, tax expert, joins us now to answer your questions for this week. Now, Suresh, thank you so much for joining us on Investors Guide. Our first question comes in from Dilip, who writes in saying he trades in equity and futures and options, and he wants to know what tax he will have to pay on his long-term and short-term gains.
So there are several activities we are talking about. One is the F&O, that is the future and options trading. Now, any income from the future and options trading is treated as a business income. It is from derivative transactions. So under section 43(5), it is treated as a business income. It would be liable to tax at the normal rate of tax depending on what slab is he in. As far as, Dilip, your intraday trading is concerned, because you are not taking delivery, it will be deemed to be speculation income and it will be added in your regular income. The only thing is, if you make a loss in this segment, it can only be set off against the speculation income and not against other income. As far as your investments are concerned, and assuming that you are doing the transaction through recognized stock exchange, if you sell the shares within a period of 12 months, that is, it is short-term capital gain, it is taxable at 15%. If it is held for more than 12 months, then it is not liable to tax.
Our next question comes in from Nikhil, who writes in to tell us that his only income is profits that he earns from trading in commodities, and he tells us it doesn't exceed about $1.5 lakh a year. Now, he wants to know, should he file his returns and will his income need to be audited?
Yes, Nikhil, as your income is only rupees 1.5 lakhs, which is below the basic exemption limit, under normal circumstances, you are not required to file the tax return. However, if your aggregate of the favorable and unfavorable differences, which is the turnover on account of the commodity exchange transaction, is more than rupees 60 lakhs, then you have to get the tax audit done under section 44AB, and in which case you have to file your tax return even if your income is below the exemption limit.
Our last question comes in from Ashish, who writes in from Kolkata, tells us he recently bought an apartment with his brother and the home loan was approved for both of them by the bank and the EMI goes out of their joint bank account. Now, he wants to know, can both of them split the benefit that they can earn out of Section 80C and claim that tax deduction?
Yes, Ashish, both of you can claim the deduction under Section 80C in respect of repayment of the housing loan. As you know, the amount which is maximum amount which is permissible is rupees 1 lakh toward the repayment of loan. The second thing is that whatever interest is being paid by both of you, you can claim it as a deduction if the property is let out. If the property is used by you for your own occupation, then you can claim the interest deduction up to rupees 1.5 lakhs per annum, and each one of you can claim the deduction subject to whatever is the amount of pro rata payment of the EMI made by each one of you.
All right, we've run out of time on this show. Suresh, thank you so much for joining us and answering our questions. Thank you for watching Investors Guide this week. Remember, if you have questions, you can write to us on the email ID at the bottom of your screen, and you can catch this entire episode on our Facebook page as well. Tune in next week and catch Investors Guide. Thanks for watching.